What if one narrow waterway could control global oil prices, stock markets, and even cryptocurrency demand? Right now, tensions between the United States and Iran are doing exactly that. Donald Trump has issued a strong warning telling Iran to better stop now if it is charging fees to oil tankers passing through the Strait of Hormuz. This is not just political news. This is a financial story that could impact markets worldwide. Welcome to the Financial Factory. Recently, a fragile ceasefire between the United States and Iran was announced. But just days later, reports surfaced that Iran may start charging shipping companies fees to pass through the Strait of Hormuz. And even more interesting, those fees may be paid in cryptocurrency. Trump responded immediately, warning that Iran should stop. He also stated that oil will start flowing with or without Iran, showing how serious this situation has become. To understand why this matters, we need to look at the Strait of Hormuz itself. This narrow waterway handles nearly 20% of the world's oil supply. Every day, millions of barrels of oil pass through this route from major oil-producing countries like Saudi Arabia, UAE, Kuwait, and Iraq. If anything disrupts this flow, global supply tightens. And when supply tightens, oil prices rise. When oil prices rise, inflation follows, and inflation impacts everything, from petrol prices to food costs, transportation, and even stock markets. One of the most fascinating parts of this situation is the reported cryptocurrency payments. If Iran starts charging fees in crypto, it could be a way to bypass international sanctions. Cryptocurrency transactions are harder to control compared to traditional banking systems. And this could also increase geopolitical demand for crypto. And historically, when uncertainty rises, investors sometimes move toward assets like gold, oil, and Bitcoin. That means this geopolitical tension could also influence crypto markets. From a financial perspective, markets react quickly to this type of uncertainty. If tensions escalate, oil prices may spike. Energy companies could benefit, while airlines and transportation sectors may face pressure due to higher fuel costs. Stock markets may become volatile, and investors may shift towards safe haven assets like gold, the US dollar, and government bonds. This is classic risk-off behavior seen during geopolitical conflicts. Trump's statement also sends a strong signal to global markets. By saying oil will flow with or without Iran, it suggests possible actions like military protection of tankers, diplomatic pressure, or even releasing strategic oil reserves. Each of these options carries financial implications. For example, releasing strategic reserves could temporarily stabilize oil prices, while increased military tension could trigger market fear and volatility. Investors should closely monitor several key factors. Oil price movements will be critical. Shipping activity through the Strait of Hormuz will indicate whether supply is being restricted. Diplomatic updates between the US and Iran will drive market sentiment. Crypto market volatility may increase if geopolitical demand rises. Inflation expectations may also shift depending on energy prices. Short-term traders often look for volatility during these events, while long-term investors usually focus on diversification and risk management. Geopolitical tensions create uncertainty, but they also create opportunities. Understanding how these events affect markets is essential for making informed financial decisions. The situation is still developing, and the impact could be significant. From oil prices to crypto markets, the Strait of Hormuz crisis is something every investor should watch closely. Because in today's world, geopolitics doesn't just shape headlines, it moves financial markets.